Let me ask you a question. What if you woke up one morning, looked at your bank account, and realized you've hit 50 years old, but you hardly have any savings? Maybe you've worked hard your whole life, raised a family, handled bills, helped others, but investing for your future? That part somehow slipped through the cracks. Now, you might feel it's too late, like retirement security and leaving something behind for your children or grandchildren is just a dream. But here's the truth. It's not too late. Today, we're going to talk about one of the simplest, most powerful tools to build wealth, even if you're starting from scratch at 50, 55, or even 60 years old. That tool is called an ETF, an exchange-traded fund. Stick with me because by the end of this video, you'll not only understand what ETFs are, but also how they can help you grow your money, save for retirement, and even leave a legacy for future generations. This isn't just about dollars and cents. It's about hope, security, and dignity in the years ahead. First, let's acknowledge the reality. Many financial videos are aimed at people in their 20s, 30s, or 40s. That's great for them. They've got decades to let their money grow. But what about you? You're in your 50s. Retirement is closer. Time feels short. And maybe you feel regret or even shame for not investing earlier. Listen carefully. You're not alone. In fact, according to recent surveys, nearly 45% of Americans over 50 have less than $25,000 saved for retirement. That's millions of people in the same boat. And the encouraging part? Many of them are rebuilding their financial lives right now. You can too. The past is the past. You can't change yesterday, but you can change today, and that will shape your tomorrow. So, what is an ETF? Think of it as a basket of investments. Instead of buying one single company's stock, an ETF lets you buy a collection of many stocks or bonds, all bundled together. It's like going to a grocery store. You could buy just one apple, or you could buy a fruit basket that gives you apples, oranges, bananas, and grapes. That way, if one fruit goes bad, you still have the others. ETFs spread out your risk, which is especially important when you're starting later in life. You don't want to gamble on one company. You want steady, diversified growth. And here's the beauty. ETFs are traded on the stock market just like stocks, but they usually come with lower fees, meaning more of your money stays invested, working for you. Now, you might be wondering, why ETFs? Why not individual stocks or other investments? Here are the key reasons ETFs are especially good for people starting at 50 and beyond. 1. Simplicity. You don't need to be a stock-picking genius. ETFs give you instant diversification. 2. Lower risk. Instead of betting on one company failing or succeeding, you're spread across hundreds, even thousands of companies. 3. Low costs. Many ETFs have expense ratios as low as 0.03%. That's pennies on every $100. 4. Flexibility. You can buy and sell ETFs anytime the market is open, just like a stock. 5. Steady growth potential. Many ETFs track the overall market, which historically has grown around 7 to 10% per year on average. For someone starting later, ETFs give you both growth potential and peace of mind. Compounding plus dollar cost averaging. Now here's the part too many people overlook. Results don't just come from what you invest in, but how you invest. When you invest consistently, month after month, through good markets and bad, you're using dollar cost averaging. That means sometimes you buy at high prices, sometimes at low prices, but over time, you smooth out the cost of your investments. Pair that with compounding and the results are powerful. Compounding means your money earns returns, and then those returns earn returns, and so on, like a snowball rolling downhill getting bigger and bigger. And here's the key: consistency. The market will rise and fall, but if you keep investing the same amount, or more if possible, you'll come out ahead. The very times the market is down are often when your future self will thank you most, because you bought more shares at lower prices. Facing the fear of too late. Here's something important. Starting at 50 is not too late, but it does mean you need a clear, consistent strategy. Yes, you may not have 30 or 40 years for your money to grow, but you do have 10, 15, or even 20 years. That's enough time to make a powerful difference. Let's put this into perspective. If you invest $500 a month in a broad market ETF that grows at an average of 7% annually, in 10 years, you'd have about $86,542. In 15 years, about $158,481. In 20 years, over $260,463. Now, let's see what happens if that same money grows at an average of 10% annually. In 10 years, you'd have about $102,422. That's $35,000 more. In 15 years, about $207,235. That's $119,000 more. In 20 years, over $379,684. Nearly $287,000 more. Now, imagine that money supporting your retirement, or even being passed down to your children or grandchildren. That's the legacy we're talking about. Not all ETFs are the same. Here are a few types you should know about. 1. Broad market ETFs. These track indexes like the S&P 500, giving you exposure to 500 of America's biggest companies. 2. Bond ETFs. Lower risk, steady income. Great for balancing your portfolio as you get closer to retirement. 3. Dividend ETFs. These pay you regular income, like a paycheck, while your money keeps growing. 4. International ETFs. Exposure to global companies, adding extra diversification. 5. Real estate ETFs. These let you invest in real estate without buying property yourself. They track groups of real estate companies and REITs, real estate investment trusts, giving you exposure to rental income and property value growth. 6. Crypto-based ETFs. These track cryptocurrencies like Bitcoin or Ethereum, giving you access to the crypto market without needing a digital wallet. They're higher risk and can be very volatile, but also offer big growth potential for risk-tolerant investors. The mix you choose will depend on your risk tolerance, goals, and how close you are to retirement. But starting with a simple broad market ETF is often a strong first step. Investing at 50 and beyond isn't just about retirement. It's also about mindset. Instead of thinking, I don't have enough time, shift to, I'm planting seeds now that will grow into a legacy even in the limited time I have left to invest. Every dollar you invest in ETFs today isn't just for you. It can benefit your spouse, your children, and even your grandchildren. Picture this. You build a $250,000 ETF portfolio by age 70. You enjoy the income in retirement, but when you pass, that portfolio continues to grow for the next generation. That's how ordinary people leave extraordinary legacies. Before we wrap up, let's cover mistakes to avoid. 1. Chasing hot stocks. Don't gamble on trends or penny stocks. Stick with ETFs. 2. Ignoring fees. Even small percentages eat into your wealth over time. Low-cost ETFs are key. 3. Panic selling. Markets go up and down. Don't let fear drive your decisions. 4. Not having a plan. Decide your monthly investment amount, stick to it, and review yearly. 5. Not having a budget. Figure out your expenses versus your income and optimize. The goal is to save for 3 to 12 months of expenses and at least 10% of income to use for investments. Remember, wealth building is a marathon, not a sprint. I know learning how to invest in ETFs can feel overwhelming. That's why we've created resources to help you. Our financial books give you step-by-step strategies on investing, saving, and building wealth at any age. Our private community is a safe space to ask questions, share progress, and get support from people walking the same journey. And of course, hit that subscribe button so you never miss our future videos. This is your journey, but you don't have to walk it alone. So, here's the truth. Yes, you're starting later, but later does not mean never. With ETFs, you have a powerful, simple tool to grow your money, prepare for retirement, and leave a legacy behind. Don't let regret hold you back. Don't let fear freeze you in place. Start where you are with what you have and take consistent steps forward. Because at the end of the day, your future self and your family will thank you for the seeds you planted today. This is your second chance at financial freedom. Take it. Thank you for watching. Remember, it's never too late to invest in your future. I'll see you in the next video.